Hello everyone, it's another Monday and it's time for our Monday market outlook. So last week, the Philippines saw inflation soaring to a 14-year high of 8.7 in January. So this may prompt the BSP to raise rates higher than the expected 25 basis points rate hike this Thursday. So most analysts are saying that the BSP might see a 50 basis point hike given the hotter than expected inflation numbers, while a lot of people are saying inflation has peaked. Now, remember, ever since October, we have been saying inflation has peaked, and until January, inflation is still peaking. These results might force the Banco Central's hand. So remember, this year, we are scheduled to hike rates by 100 basis points or more, right? So I guess the or more part of that statement may happen given the hotter than expected inflation numbers. No? As we mentioned in our 2023 Outlook episode, this year we will continue to experience high interest rate, high inflation environment. And as mentioned, given this environment, we pick Philippine banking stocks as beneficiaries of these higher interest rates, which will effectively increase their net interest margins. So look into BDO, BPI, Metrobank, and even Union Bank, who is performing quite well, to have some position in your portfolio to protect you from some of the downside that we may experience at the later part of the year. Another case to be made for banks is the recent news of banks' NPL ratio hitting a 2-year low. This despite rising interest rates. It's interesting to see that people are still able to pay their loans despite higher interest rates. But on the downside though, BPI was slapped by the SEC with a 134 million fine, which was later reduced to around 30 million for a registration error involving its stock option plan. Now, this doesn't really bode well for BPI in terms of their corporate governance. If you want to replace BPI with another bank, Union Bank is a great pick. Last week, we also saw an MSCI rebalancing where ASCENT and Globe was taken out of the MSCI index. There's nothing fundamentally wrong with these stocks, so it might be a good opportunity for you to enter. Like for example, Globe, if you can see Globe's chart here, the 2000 level has been proven to be quite a strong support. Now let's take a look at the Philippine market valuation compared to its 10-year average, right? So here is the PSEI's valuation over 10 years. We were averaging 19.4 PE ratio, and we are currently at 13.3. So is this cheap? Yes, it's very cheap. So which is why we've been saying this is a good time to enter into the stock markets. So let's look at some local money flows. For the past month, we see tech, financial, consumer staples, utilities, and discretionary outperforming the index, right? So we have energy, healthcare, telecom, the defensives, no, taking a back seat. However, look at the last 7 days. We have materials, energy going up, and then we have financial staples, healthcare on the downside. Are we seeing institutions already positioning to the defensives in anticipation of the US CPI numbers, which will come out on Tuesday, and in anticipation of BSP rate hikes this Thursday, no? So taking a look at the PSEI chart, we can see the Philippine index tracking our projected path, and it's currently sitting at a critical level in the uptrend line. Whether the index breaks support or bounces off support will be highly dependent on the CPI numbers and the BSP announcement this Thursday. As we mentioned in our previous episodes, it was a good time to start considering stocks for some bargain hunting potential. A nice chart here from BDO, very strong bullish move. If it breaks through the 27 level here, the next resistance would be at 133. Metrobank also breaking out of its 60 resistance point. Look for Metrobank to reach our target price of around 64.95 or 65 pesos. Now AP also, if you were able to buy the dip during January 31, congratulations, no? Semirara also, nice bounce here, but be on the lookout if Semirara might go back to the downside or fill this gap here. No? But the critical level here would be at around 3250, and if it breaks that, it can fill the gap up to 3440. Now SSI also very strong bounce from the 50 EMA line. This is a great rejection wick here. This means that there are ready buyers at this level, and it moved the stock up to its resistance now at 173. I'm looking at SSI to reach around 188 target price. No? So Bloomberry also, so a nice breakout from Bloomberry, and I expect Bloomberry to reach around 1023. And if it breaks out of 1023, the next resistance here is at 1197. So Union Bank, nice bounce. So this might be a good opportunity for you to buy the dip. So URC is another great buy on breakout stock. Look at URC as it broke out of its downtrend line here, challenging its 150 peso resistance. If it manages to break out of 150, look for URC to head to 160 and next resistance at around 180. So this is a great defensive stock to consider. Moving on to the US markets, last week we saw a lot of hype from AI, especially after Google came out with their version of AI and failed miserably, costing Alphabet 100 billion in market value. Now looking at Google's chart, we can see a 13% drop in their share price after their AI Bard gave an inaccurate answer to a query. And it didn't really help that Microsoft came out with their new AI-powered Bing search engine that can write essays and plan vacations for you. And a lot of people were really impressed with Microsoft's AI implementation. Now, remember that Bing's market share stands at around 8.94, and Google's search engine is still the market leader at around 90%. Now, some people are saying, 9%, there's still a lot more upside. If you have 90% market share, what's the upside? It's just 10%. But sometimes you have to consider it's 9% for a reason, because it wasn't really that great. But is AI going to be the factor for Microsoft to start challenging Alphabet in the search engine race? So we'll see. Right now, for me, it's just hype, right? We still don't know how monetization is going to happen in an AI-powered search, right? Is AI supposed to insert advertiser name here? How is it going to happen? So we will see. So since AI was all the hype last week, let's try to ask ChatGPT on what its thoughts are about the market. Can you give me a specific date when you think the market will crash? And according to ChatGPT, the market will begin its crash on June 15. Wow. So let's take note of that date and see if ChatGPT is any good at predicting market crashes. So next question, do you think the US market will experience a new bottom this year? Yes, the US market will experience a new bottom on December 1st. Okay, when do you think the Fed will stop raising interest rates? The Fed will stop raising interest rates on September 15, right? So let's take note of those dates and see. So let's look at this chart of the S&P 500 against the Fed funds rate. Anytime the Fed starts cutting on rates, the market tends to go down. Now, why is this so? Because when the Fed is raising interest rates, that means that the economy is hot, right? And when the economy is running hot, that means that company earnings are also very good. Thus, when company earnings are on the rise, the stock market also goes up. If you take a look here carefully, the market goes down first and then the Fed starts cutting down rates. Now, what does this mean? So this means that the economy is turning bad and the Fed now has to cut rates to spur the economy back into action, right? So this happened twice in the 2000 recession and the 2008 recession here. So when the Fed starts cutting down rates, earnings are already suffering, which is why the market is also going down. Now, if we take a look at where we are today, right? Today, we can see that the Fed has still some ways to go to continue raising rates, right? So that means that this movement by the S&P going up is still valid, right? But what happens when the Fed maintains it and starts cutting down later in the year, right? So again, we've said that the market will start to go down first and then follow along the Fed funds rate, right? So we may see this market bottom happening in December 1, and we may see the economy go bad by September 15. Now, if we look at the US yield curve, the difference between the 2-year and the 10-year yield, 85 basis points wide. And historically, every time that the yield curve goes up to those levels, it is usually followed by periods of recession. You see 1990s here, the yield curve went up, recession. Yield curve went up, recession. Yield curve was up, recession. Yield curve, recession. Here we are currently here at around 85 basis points. Is there going to be a gray shaded area here which will denote a recession? So let's look at the S&P 500 chart. Last week, we did mention that the S&P 500 was hitting resistance here at the uptrend line and might make a move to the downside, testing its support. Now it's sitting at a critical level, awaiting the CPI numbers that will come in on Tuesday. A lot of people are expecting the CPI numbers to come in hot this Tuesday. Now this doesn't bode well for the S&P. Since it's at a critical level here, and if the numbers come in hot and the market reacts to it, we might see a move to the downside to its 4,000 or 3,950 level here. Now what could possibly happen is a market reaction going down here, test support, give a bounce, and might actually move to the downside to test 3,800 or 3,750. Doesn't really help the market a lot, because next week we will have a slew of Fed officials coming out with speeches, and one to look out for is the Bullard speech on February 16. Bullard, who is really one of the most hawkish Fed officials there, might steer the market downwards, testing its support at 3,750. So let's look at some sector action here. We have our one-day chart, energy, utilities, renewable energy, consumer staples, industrials, healthcare. Now, are we seeing a rotation into the defensives? If you look at the five-day chart, look at energy, it's gone up. In the last day, in the last trading day last week, we are seeing some form of rotation happening. Let's look at some ratios here. Let's look at XLY and XLP, right? So we have consumer staples and consumer discretionary. Now, consumer discretionary has been in a rally since December, but now there seems to be a rotation happening from discretionary into staples. Seems to have hit a resistance wall here, and it might start to come down. Now, let's look at QQQ versus SPY. Right? Same scenario here. We've seen a rally from the tech-heavy Nasdaq against the S&P 500, but recently we have seen some rotation going into the S&P 500 index. Does this look like an island reversal, right? So if we look at previous island reversals, this looks like an island reversal, right? Went to the downside, island reversal, downside, island reversal, it went to the upside. Now, are we seeing the same scenario here where there's an island reversal? Are we seeing a market coming into defensives to test its previous low here? So let's see some exciting things happening this week. Be careful of the CPI announcement. Expect some volatility in the markets, as well as volatility in the local markets given the BSP rate hike decision this Thursday. So that's it for this week. I hope you found this episode useful. Please like this video, subscribe to the channel, and as usual, good luck on your trades. Please manage your risks accordingly, and I'll see you again next week. Thank you very much. Bye-bye.